First of all, what is this disposal of a non-current asset? Why do we have to calculate these disposals? What's the reason behind it? First of all, guys, when we record our assets in the financial statements, we record it at the net book value, which we learned in the previous chapter. So when you're recording your assets at net book value, also we call it carrying value. One way or the other, you will be selling that asset. Let's say, example, your useful life is over, or let's say you cannot take any more benefits from that asset, or you are upgrading into a more better non-current asset. Maybe guys, now these days there's a lot of change in technology and new types of inventions are coming up. So you might need to upgrade from a machine that you have for a new type of a machine. Depends. So there may be many factors that would cause you to sell the non-current asset which you have in the business. So guys, that sale of a non-current asset is called disposal. So obviously we should record if we are selling an asset, like when we purchase an asset, we record it. If we are selling an asset, we record it as well, obviously. But however, the most important thing that we have to calculate in a disposal is the profit or loss on disposal. Now guys, let's say my net book value is $10,000. I have an asset worth $10,000. If I am selling it at anything more than the value of my asset, then I am making a profit. I'm realizing a profit. The value of the asset is just 10,000. If I say it at 11,000, 12,000 or anything more than the net book value, I'm immediately realizing a gain. What if I'm selling an asset at a price lower than the net book value? Then guys, I'm making a loss. So we account for disposal and we also find out the profit or loss on disposal, because that is very significant to record in our financial statements. Because guys, everything goes in line with double entry and the effects of the accounting equation. If I'm subtracting my assets, non-current assets, by the net book value, and if I'm recording the cash that I generate, if the cash I received, not generate, the cash that I received, if the cash that I received is anything different to the value of my asset, then obviously there's a profit or loss. So you see guys, it will not tell you if I'm not accounting for everything. So the profit or loss is recorded in the income statement as an income or an expense. Simple as that. So guys, next thing that we are going to look into is the double entry of disposal. Now guys, first of all, we'll understand the double entry. If you are disposing a non-current asset, your number of assets will reduce in the business. So assets reducing is a credit transaction. So you would credit the non-current assets and you would debit the disposal T account. The next thing you would do would be taking out the provision for depreciation. Now guys, the cost of the non-current asset minus accumulated depreciation would give you the net book value. And I told you earlier, how do you calculate profit or loss? You compare the net book value with the selling price. So guys, to calculate the net book value, you need to take the cost and subtract the provision for depreciation. So guys, in that case, to reduce the provision for depreciation is already credited in the provision for depreciation T account, right? To reduce it, you would debit provision for depreciation and you would credit the disposal T account. So as in the disposal T account, you would have in the debit side the cost of the asset. In the credit side, you would have the disposal depreciation, disposal assets depreciation. So technically guys, you have the net book value in that disposal T account right now. Then you would record the amount of proceeds you receive from that sale. So debit your cash or bank. Some cases guys, it might be a other receivable. Maybe you are selling the asset on credit. In that case, debit your other receivables and credit your disposal T account. Then guys, once you balance the disposal T account, you would either end up with a debit balance or a credit balance. If it's a credit balance or debit balance, guys, the balancing figure, you call it the income statement. Let's say it's a debit balance. So you call it income statement and you would credit the income statement. And guys, I have taught you income statement credit means it's a income. So if you are creating income statement, it's an income, that means that is a profit on disposal. On the other hand, if you get a credit balance, then you are crediting the disposal T account and debiting the income statement. Income statement debit is an expense, thereby it's a loss on disposal. Now we look at a small example.